All right. Good morning, everybody. I hope everybody's having a great day. It is another week. It is March 23rd, 2026. It is good to see everybody in here today. Another day, another dollar, as they say. Man, this weekend we had a lot of things happening in the market. So we got lots to cover today. I actually had a couple of really, really good questions come through in the DMs as well. Some people asking about, personal money questions. And yeah, we're going to try to, answer all those questions here today as well. So it's going to be a fun day. We're going to talk about a lot of things. So hopefully you guys are ready to have that conversation with me. And guys, if you want to join in, all right, you can join in on the conversation as well. All you got to do is join the Discord if you're watching this right now live, okay? If you're watching this live on YouTube or the Purple app, whatever it may be, we're on 4 different live streams right now. Every one of our live streams has the Discord link. It's the Key Crew. Lock in, break out, come through to the Discord. Let me know, ping me. All right, ping me, and we'll go ahead and get you up in our live stream VC. You don't have to show your face. It's just a voice chat, and you can ask me some financial questions. Maybe you want to go through some situations. Maybe you want to talk through some things. That's cool as well. So I'm just going to let everybody in my Discord know that we are live right now. We are live, baby. All right, so we are live right now. Actually, I want to know what it looks like on YouTube. Let me see. Can I get a YouTube link on this from YouTube right now? I think I probably can. By the way, I need to change my my thing there. I need to change my logo, but yeah. Something about that. Oh, I can. Okay. All right. So I can. Yeah, I can do that. Okay. So anyway, guys, it is good to see everybody in here. It's Monday. We had a lot of things to go over the weekend as far as like markets are concerned. If we go here. So yeah, we actually had some things happening over the weekend. Over the weekend, Trump, first of all, let's rewind the tape. Let's go all the way back to Friday. Okay. Because man, like, let me tell you, man, like, it is like, I mean, every couple of hours, the announcement changed. So Friday was one of those like really, really confusing days in the market. Like the market really didn't know what to do at some point. And every hour, there was like all these knee-jerk reactions on Friday. And even when I was looking at the ticker tape, I was like, why is this happening? And look at this. This was Friday's trade, okay? This is Friday's trade. So this was Friday's opening bell. This was Friday's opening bell. And then after Friday's opening bell, we had different moves. We had different big moves, and we had a huge move down because of announcements that were made in the White House. So I'll just go over them right now. There was this one post that I wanted to go over, and I think it highlighted pretty much everything that went on. Oh, this is it right here. This is that post. Okay, there's this like a financial media company on Twitter. And, they ain't bad. Sometimes they give out these little like news alerts, and, sometimes I read those news alerts. But so on Friday at 2:30 Eastern, so like 1.5 hours before the market was about to close, President Trump said that he was considering boots on the ground. And then like an hour and 15 minutes after that, he said, I don't want to do a ceasefire with Iran. Like, why should I do a ceasefire? We're so winning. You don't do a ceasefire if you're completely obliterating them. Like that's like paraphrasing him, but that's pretty much like what he said at that press conference, about an hour after he said that he was going to put boots on the ground. And then 90 minutes after that, all right, once the futures markets were closed, like 15 minutes after the futures markets were closed, Trump then said he was going to consider winding down the Iran operations. And I remember at that time, Bitcoin, Ethereum, everything was like popping up, after like 5 o'clock. And I was just wondering, oh man, did I like did I just like did I just wreck myself? Like did I not go long like at the right time, you know? And I was feeling like, man, you know, maybe I missed out. Maybe I missed out. But yeah, you know, oh wow, look at this. Whoa, the market just popped up just right now. But anyway, on Friday, you know, we saw it like the market actually like, you know, take a big pump because of that. And right now the market is pumping right now too. So actually everything is pumping right now. Everything is pumping right now. So what is going on? I don't know. So something must have just happened right now. Let's just take a break on what we were talking right now and just see what is going on, because it looks like everything is going up right now. All the markets are going up right now. Why are they going up right now? I have no idea. Like literally in just the last few seconds, I just got an alert saying that everything is just popping right now. So wow, look at this. Everything is popping to the upside. EWZ. Oh man, I should have gotten rid of those covered calls. It is what it is. Let's see. Why are the markets pumping right now? It's hard to say why it's pumping right now. Let's see. It just happened. Literally, right as I fired up the live stream, it just happened. I don't know what's happening. Maybe it's just maybe there's no reason for it. Maybe it just happened because it's just, you know, just because, you know, it could be just that, you know, it could be just because. I don't know. I don't know why. Let's actually see if by the way, I got into a gold long. I added to my gold longs and we're actually up like 60% on it. Yay! All right. But anyway, before we get into that, is it because oil collapsed? It is. Oil's collapsing. So there must have been some news. See, as oil is collapsing, everything is going up right now. Oh my goodness. The S&P 500 is up 2.5%. QQQ is up 2%. So things are happening right now. Things are happening. Markets are moving right now. There must be some sort of news that came out. Some favorable news about Iran must have just come out like 2 or 3 minutes ago. It must be because, why would this happen? I have no idea. Let's actually go look at some other news sources. I don't really have a favorite, but well, I don't know what's going on. Let's see if anything's on Twitter about what's going on. But that's crazy. That's crazy. Like literally, as we just started the live stream, the market just popped up so much right now. I have no idea why. I don't think anybody knows. So there may not be a reason for it. There just may not be even a reason for it. All right. It could just be like, oh, just everybody was so positioned a certain way. And now that the markets are about to open for the new week, they have to, you know, take some chips off the table. It could be that. But anyway, we just saw in the last couple of minutes, oil just dropped really, really hard. I mean, it went from, what is this? $99 down to $83. Oil is dropping literally $15 a barrel right now as we speak. I have no idea why. Maybe we're done. Are we done? Is this war done already? Is it done? Maybe it's done. All right. Maybe it's done. I'm not seeing any news coming out. So something must have happened. I don't know what it is. Right now, markets are on a tear right now. Everything is going up, 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 and away. Anyway, so everything that just happened. So over the weekend, we had a bunch of news events coming out. First, Trump said that, you know, he wanted to put more boots on the ground. Then he said he was not going to do any type of, you know, peace talks with Iran. And then he said, oh, he wants to wind it down. And then on Saturday, he gives Iran a 48-hour ultimatum saying that, oh, if they don't open up the Strait of Hormuz in 48 hours, then he was going to hit a power plant or something like that. And then Iran came back and said, well, if you hit our power plant, then we're going to hit all energy interests of the U.S. and any interests that buy U.S. Treasury bonds, even financial interests as well. They said they were going to hit that, and then he just escalated. It was an escalation of words, and now we're seeing oil drop. It's literally just dropped like $13. I have no idea why it dropped $13 just right now, but literally as we started right at 7, and literally 4 minutes into our live stream, oil just dropped $13 a barrel. I have no idea why, and it's sending all the markets going crazy right now. I don't know if you can see my screen right now. I'm going to change over to full screen view. You can see right now, this is ES. That's the S&P 500 futures. Right now, the S&P 500 futures is up 2.7%. NASDAQ is up 2.3%. I need some updates on what's going on. I'm not seeing any news reports or nothing. So this could be just the markets opening and just reversing some of the trades that they had over the weekend. Maybe there was a bunch of hedging happening over the weekend, and they're just winding down those hedges. There doesn't have to be a reason for big moves. Okay, big moves usually happen because of a positioning, like the overall big money is positioned in a certain way, and then they need to unwind it all at once. These kind of things happen. They usually happen around binary events. We usually also see this like during FOMC or during like an earnings report on certain stocks. I'm not saying that we had anything like that. I'm not saying we had any binary events today, but again, it's mostly based on positioning. If everybody's positioned for something, maybe everybody was positioned for, weekend risk and it doesn't happen. Well, now they got to unwind all those hedges. So this could be like that hedges unwinding on all these different markets. And luckily for us, we saw gold coming down this morning, and part of the reason why I always tell people to join the Discord is because you see these live trades happening. And in the Discord, I even said, because on Friday we took that gold long. We took that on the GLD, which is the ETF that's traded on the New York Stock Exchange. If you guys remember, we actually bought those 440 to 470 call debit spreads right here at the bottom of Friday's trade. And I said, hey, this is a starter position. We're going to buy more if gold gets down to 4,100 to 4,200. And for us, it happened this morning. It happened around like 4 or 5 in the morning. I was up. I was preparing for this live stream, and I noticed that gold was tanking. And while gold was tanking, around that 41 to 4,200, like I said in the live stream last week, and like I said in the Discord, I was going to get more into it. And one of the ways that I got more gold was through the futures contracts, the perp futures that are on Trade XYZ. And if you guys remember from last week, I told you guys Trade XYZ has an exclusive partnership with the S&P 500, the S&P Dow Jones, a publishing company, and they have the exclusive perpetual futures for the S&P on their platform. And I noticed that they had gold on their platform too. So I just took some of the little dust in my crypto accounts, my different MetaMasks and Phantom accounts, the different basically the different shit coins that are all zero. I sold them all off, and there was about $200-300 left in there. So I bought a little bit of gold perps right as everything was tanking in the morning. And look at this now. We're up a lot. We're up almost double. We're up about $222 out of a $300 buy. Now this perp position for me is not that big. If you noticed our 440 to 470 call debit spreads for GLD, those are about $750 a spread. So this is not even half of one spread. And I have several spreads. I have a few. I bought 5 spreads. So that's just a starter position. And again, I was willing to go 2x, 3x the amount if we got our price at 41 to 4,200 on gold. Unfortunately, the New York Stock Exchange is still closed right now. It won't be open for another 2 hours. So I was not able to get my GLD spreads because the GLD is an ETF that trades during the New York Stock Exchange hours. I did have the option of buying the CME COMEX gold futures options contracts. I could have traded that, but because of the kind of the panic that the market was in, the bid and ask spread between like the buying price and the selling price was so wide. It was really hard to get a fill. So I was not able to get a fill on those GC, COMEX futures, gold futures, call spreads. So that's why I opted to use Trade XYZ. Which was actually really, really nice. So actually, it worked really, really well. It executed really, really well. I already have an open order to get out at around 5,000 when gold goes to 5,000. And if I do that, I will have tripled my whatever I had for risk. So it's a 2-to-1 reward to risk ratio that I'm doing. So I'm potentially 3xing on this trade. So let's see what happens. And already like the markets have reacted favorably. There seems to be some sort of either profit taking, or there seems to be some sort of getting rid of hedges in the market right now, because everything just pumps, like everything just from Friday's move, everything is just reversing right now. So if we look at ES right now, this is actually a little bit delayed, but it's around this 67.14. Actually, let me go and use, let's go ahead and use Interactive Brokers for our charts on this for now, just because it's probably going to give us a little bit. Yeah, it's going to give us a more up to date. My Interactive Brokers account, the trading view in that is all in real time. So we can actually take a look at ES, which is the S&P 500 futures. And right now, yeah, it looks like there is a little bit of a pop right now. But oh, wait a minute. No, this is not correct. No, where's the after hours on this? Usually it gives me an option for after hours. Oh, right there. I forgot that I turned that off, because sometimes it makes the chart look kind of funny, but I kind of wanted to put the after hours on it right now. Where the hell is this? As you can tell, I rarely use the chart. I go between using these charts, and there's another software that I use. Where is the trading? No, I just want to see the after hours as well too. Is it gonna be very difficult about this? Oh, it looks like it's gonna be very difficult. No, oh, there we go. There, I knew it was one of these little buttons. Okay, there we go. So now we got the after hours. Okay, so there we go. So right now, that's the after hours. The daily candle hasn't started yet, but we're seeing that, yeah, right now, it just popped up 200 points. The S&P 500 just popped up 200 points out of nowhere. So about 3% that it popped up from the bottom of today. So that is 67.12. Does that reverse all of Friday's move? 67.12. Actually, it goes way more than that. It actually reverses Friday's and Thursday's move. So right now, if it opens there, it's gonna open right here in the middle of Wednesday's down day. So it's actually recovering quite. It's popping up a lot. So we will see what happens. We shall see also what happens to the term structure. Remember last week, we also talked about the term structure within the VIX. So right now, the VIX term structure is in this way. Right now, this is also a little bit behind right now. This is about behind. I think this is delayed by about, I want to say like 10, 15 minutes. This is delayed, but it looks like we are still in contango. I'm sorry, we're still in backwardation. Meaning there's still a lot of uncertainty that is priced in the short term, okay? Remember, guys, from last week, when it's backwardation, whenever the front month on the VIX is greater than the back month, it means there's that much demand for portfolio insurance because there's that much uncertainty in the market. So right now we're seeing that backwardation is still in effect in the markets right now. So, I need to see, I would like to see that, go back into contango, meaning the front month becomes smaller than the back month. And then that means that, oh, this risk episode is over. That means everything is priced in, right? But that's not the case right now. I do believe that we could still see another wave of volatility, maybe later this week into next week. as long as this is still in backwardation, as long as the VIX futures is still in backwardation, we might still see that. So I still think that, if it's very, very possible that we see another wave of volatility. I need to ponder a little bit about this, but I actually think this might be a good opportunity for us to maybe put even a short on the market, although I am seeing that, wow, this is going to be an outside day up. So I know I haven't gone over any like candlestick analysis or anything like that, but whenever you see a big reversal where it totally engulfs the previous day's candle, we call that an outside day. And generally an outside day means that the other side got totally overwhelmed by the market. Okay. So that means the bears got totally overwhelmed. So there could have been a lot of bearish traders who thought that, the momentum was going to continue, and now they're trapped at the bottom. So that usually means, usually when that happens, that usually means that we could see a sustained movement towards that direction, which means this will be an up, right? This is an outside day up. So we could see a sustained up market. If that's the case, I might be looking at like 6,800 or so, maybe 6,820, 6,800 to buy some puts on the market for another, wave down. Maybe not. I don't know. We got to get there first. We got to get to 6,800 first. Let's see what the market does. When it gets to 6,800, we'll get a confirmation. If we get a confirmation, we can jump on a trade. No confirmation, no trade. Okay. So it looks like the markets are at least for some reason, they are reacting favorably to something. Let's take a look at gold. Remember, we got those gold longs. So I think our gold long is pretty safe right now. We're probably making money on those gold longs. There we go. We're still in the profit. This thing could go for a while. Dang. Remember when we were at $200 and something profit? Maybe we should have taken some profits there. And it's coming back down, but I'm fairly confident that this thing will go back to 5,000. There's still a lot of demand for gold. There's a lot of central bank demand for gold. And I still think that there's going to be gold buyers that come in now at 5,000 down because this is a leverage. We're 18x leverage on this. We're leveraged 18x on this trade. Because of that, I will want to take some profits at 5,000. And if it moves beyond that, well, maybe I keep like a small little runner. Maybe I sell like 80% of the position and let 20% run to the upside with a tight stop, with a trailing stop. I might do that. Okay. So right now that's the plan. Our gold plan is working really well. We got into this gold trade. Like I said, when it gets to 41 to 4,200, I was going to get in. Unfortunately, I couldn't get into the COMEX CME, gold calls. I wanted to, though. It would have been great. It would have been great if we were able to. If we were able to get into some call options on the CME gold futures contract, that would have been ideal. But again, because of the hours at which the opportunity presented itself, the spreads, the bid and ask spread on those gold futures was just too expensive. It was just too wide. It was really, really hard to get a fill on that. So it is what it is. Sometimes the opportunity that presents itself is tradable. Sometimes it's not. So fortunately for us, we have access now to this tool, Trade XYZ. Again, we looked at this last week. It's got an exclusive agreement with the S&P Dow Jones Publishing Company to offer the S&P 500 perp futures on their platform, and it's part of the Hyperliquid platform. And let me tell you, man, it's really smooth, really, really smooth. I'm very impressed at the execution on this. So we might be using this a lot more going forward. As we progress in this, I'll show you guys how to use this. It's very, very easy. You literally just put in what you want to buy. You put your leverage amount, you place the order, you press this button, and there's a little pop-up that says, are you sure? You press OK, boom, the trade goes through. It's that simple. It is very, very simple. And so it's very simple. The execution's good. And plus, it's got a lot of tickers in it. So it's got a lot of TradFi tickers, different individual stocks, commodities, everything like that. So I've been using Trade XYZ. I used it for gold. It's working pretty well. We're up 50% already on the trade for gold. And yeah, I'm going to hold this all the way to 5,000. Let's see what happens. We still have those GLD call spreads as well too. So hopefully, we see a little bit of money coming through on that as well. I know last time when we talked about options, I had my screen covered up with the overlays and stuff. I didn't know. Last week I didn't know because I saw the messages that you guys sent me and they were like, oh man, I can't see your IBKR. I'll make sure to go back and forth and make sure to make sure to hide the overlays when we're using interactive brokers. Actually, I'm using interactive brokers right now. As some of you guys asked me, what strikes do I pick when I buy option spreads and things like that. I mean, I can go over that in a little bit of detail right now. So for example, right now, this is IBIT. So, I said we were using GLD. And if I remember correctly, I believe we are in the June, the 90-day expirations. Let me actually go take a look and make sure that that is actually the right expiration that we are using. Yes, I believe it is. I think it was June, if I'm not mistaken. I'm just logging in right now and just making sure. What is this date? What was the date of that? Today's the 23rd, so it must have been on the 20th. The trade was done on the 20th. It was done on Friday. No, it was done on Thursday. We did the trade on Thursday. So, it was GLD, GC options. Hopefully these prices stay at these levels until so I can do this. Actually, I'm not really sure where I put it. Oh, I put it right here. Okay. So yeah, it was 754.40 for June. Yeah, it was for June. Okay. I just have to remember what was the expiration that I used. So yeah, it was a June expiration, which is typical of me. I usually use like anywhere from 60 to 90 days. So usually what I do is, even like even the amount of time that I put on the option is very dependent on what I see happening in the market. So as you guys know, when we were actually getting into GLD, we said that, it was around 43 to 4,400. And I said, there's a very good chance it could knife down to 41 to 4,200 because it can happen. Okay. It can happen. Right. And so whenever I am legging into a position and I know that there could be a potentially big like drop off or a big like change in the upcoming days, I usually extend the time that I use. So instead of like a 30-day or a 60-day, I'll go like 90 days, okay? And generally what I like to do is I like to buy the 40 delta, and the deltas, usually your brokerage will tell you what delta your option is. Your delta pretty much tells you how much your option price changes for every $1 change in the underlying. So for a delta, I usually go long the delta 40 and I try to short the delta 25, okay? So, for this, it was the delta 40 was around here, 440. And then I sold the delta 25, which was 470. So I bought the 440, sold the 470. So that means my max profit is the difference between those two strike prices, which is 470 minus 440, which is $30. And I paid $7.50 for it. So I could potentially quadruple it, which means it gives me a 3-to-1 reward to risk, right? I'm risking $7.50 to make $22.50. I'm risking 1 to make 3, right? For a 4X. So that's usually how I like to structure a debit spread when I get into a position. And this one, I opted for a little bit longer expiration because if it did move against me for the first week or two, I didn't want to face up as big of a drawdown. The price of your spread actually fluctuates more the closer you get to expiration. So 99 days, that's almost 100 days. That's a lot of time, for this to oscillate back and forth. Now, the drawback to having that much time, though, is that if I'm right and if I'm right soon, so let's say the market goes in my favor and it gets to my target really quickly, well, then I won't make as much. So that's the drawback. All right. But for me, the number one priority is protecting capital. Oh, I see Mitt. Dude, what's going on? My boy Southern is on. What's going on? Can you do it from a phone? You want to call in? You want to call in on the phone? You can call in on the phone if you want. If you call in on the phone, what I'll do is I'll put you on speaker. I'll put you on speaker next to my phone if you want to do that. If you want to call me, you can go ahead and do that, and I'll put you on speaker if you want to do that, Mitch. Or again, you could join in the Discord, and I will just, you could just join the live stream VC, and you can ask me there. So either way, either call me on the phone or get me on the Discord. And some of you guys, some of the community members know my phone number. I don't give out my phone number to everybody. There's some community members that I've, gotten very, very friendly with. We've become very, very good friends. And so some of them I did pass my phone number to. But yeah, if you want to call in, Mitch, go ahead. I can put you on speaker. You can ask me some questions. That's cool. So right now it looks like the market is going up. It looks like gold is going up. It looks like oil is coming down. I don't know if it was like news driven or something like that. But it looks like oil is recapturing $90 a barrel. It went all the way down to 82. Now we're at 90. I don't know what's going on. Oil tumbles after Trump postpones U.S. strikes against Iran. Energy Center for 5 days. So Trump tacoed. He tacoed, man. Trump always chickens out. He probably saw the market this morning. He probably saw the futures. But you know what, man? I bet you Trump stays up on TV and watches the market. Like, he watches the 1 minute candles. This guy. Can you imagine the leader of the free world, like, sitting in front of his screen and just like doom scrolling financial news? That's crazy. But maybe I don't know. Maybe I guess so. So oil tumbles after Trump postpones the U.S. strikes against Iran energy infrastructure for 5 days. So this happened live right as we were like getting on. So like, I don't know, maybe Trump watches Money Maxxi. Maybe he saw Money Maxxi. Maybe he saw me talking shit about like him. And then he was like, you know what, Rooster? I'm gonna screw up your tempo, man. Maybe he did. I don't know. But anyways, thank you. You made gold go up. So that's cool. So I'm pleased to report that the United States of America and the country of Iran have had over the last 2 days very good and productive conversations regarding a complete and total resolution of our hostilities in the Middle East, Trump said in a Truth Social post. The post comes after Trump gave Iran a 48-hour ultimatum to reopen the Strait of Hormuz. Okay, so they had some talks. I've instructed the Department of War to postpone any and all military strikes against Iranian power plants and energy infrastructure for a 5-day period. Okay, interesting. Assuming that Hormuz flows remain at 5% of normal flows through April 10th, prices are likely to trend higher over that period, Goldman analysts said. I don't really care what Goldman analysts say. Goldman analysts are not your friends. They're looking out for their clients. They're not looking out for you. They're not looking out for anybody else. So I don't believe a word they say. Okay, interesting. Very interesting. So some social media post. He said, we're gonna back off a little bit or something like that. Okay, interesting. Man, this is like, I swear, if you through social media, like these policies through social media, I mean, it creates these crazy movements in the market. I mean, it is just crazy. If you were long on oil, you just got wrecked. You just got royally wrecked. And you know what is really funny, man? I actually saw a bunch of crypto Twitter KOLs go long on oil on Friday and over the weekend. They went long on oil. They were like, it's coiling up. It's going to make a new move to 120 or something like that. That's what they said. And look at it now. Now it's at $89. So there you go. Again, I've been saying this from the beginning. Nobody knows. I don't know. You don't know, man. That crystal ball we bought at Walmart don't know, man. That shit is a paperweight. Okay, nobody knows the future. Your job is to manage risk in front of uncertainty. Okay, and if you went all in on oil long on Friday, expecting to make money, and this happens, I mean, I mean, come on, man. It's the weekend. You know there's going to be some sort of headline risk, this risk. And if you went all in on that, or if you didn't protect yourself or this or that, you just got royally wrecked, okay? And this is exactly why, you know, anybody who says that they're going to trade and get rich quickly, they're going to stay poor forever. Because that one move, this move, let me tell you. So when you buy, if you use to trade XYZ to get into oil, you know, your leverage is based on whatever you input, right? But if you used the CME futures on oil, each dollar is like $1,000, $1,000 per contract. Okay, so this move here is a $10,000 per contract move. Actually, it went even more than that. It went all the way down to 82. So your drawdown, even though it was for a split second, your drawdown was $18,000 per contract from here to here. From 7:05 a.m. to 7:09. So in that 4 minutes, your drawdown on their contract was around almost 20 grand per contract. Yeah, you would have gotten liquidated in 2 minutes. All right, let alone a stop. Yeah, if you had a stop order, you probably got mad slippage. Okay, you probably got stopped out way lower than your level because there was probably mad slippage on this. So you got royally wrecked. Okay, and remember last week I said, dude, getting into an oil trade at this moment is like FOMO. You're FOMOing. And remember what I said with the solution to FOMO? JOMO, the joy of missing out. All right, because there's always another opportunity around the corner. Look, man, we missed out on oil, but guess what? We got back into gold. Now we're making money on gold, right? Watch, the market drops. The market's going to go up. Maybe it's an opportunity for us to short. Maybe the next short trade is the next opportunity. Well, let's say we missed the short trade. Well, at the bottom, then we can buy the dip. So there's always another trade that comes around the corner. And this is like what I talk about mindset. It really is all about mindset. If you want to make money in the markets, it really is about mindset. Everybody focuses on like the indicators, like the charts, the way I look at candles. No. Okay. That shit comes and goes. All right. But let me tell you what's been universal since the ancient days of ancient grain markets and ancient Sumeria to the stock markets and crypto markets today. What has been the fundamental truth? There's two fundamental truths: patience and discipline. Patience and discipline. Okay. You have to be patient for your opportunity, for the right opportunity where your edge is at its greatest. Then you have to have the discipline to act on it, and when the opportunity presents itself. Okay, so it's really all about mindset. And the reason why people chase returns is because a lot of people see social media influencers or their friends making money, and they say, well, why not me? Everybody making money. I want to make some money too. And they chase after something that they don't fully understand, or when the timing is wrong or whatever. It's because they got that FOMO. It's because they have the scarcity mindset. It's the mindset of the poor. You can have $1 million in your bank account. You could have $1 billion in your bank account. But if you've got the scarcity mindset, you will lose all your money. All right. This is the mindset of poor people, of scarcity, which is that all opportunities are scarce. We need to jump on every opportunity because we don't know when the next one's going to come up. That's the mindset of scarcity. That's the mindset of being poor. All right. Let me tell you about the mindset of abundance, the mindset of wealth. Okay. The mindset of wealth and the mindset of abundance is that there's always another opportunity just around the corner. There is no reason for me to get involved in everything that comes my way. All right. Especially where I don't have my edge or where I don't understand what the risks are. There's no reason to jump on that. There's always going to be another opportunity around the corner. That is the mindset of abundance and the mindset of wealth. If you adopt the mindset of wealth, wealth will be attracted to you. I don't make up the rules of the game. I just know how to play it. Okay, that's just how it works. There is a reason why over 70% of lottery winners go bankrupt within 2 years. There is a reason for that. It's because they made that money without the mindset of what they have the mindset of scarcity. And because of that, they're going to lose all their money. All right. No matter how broke you are, broke is a temporary condition, okay? Broke is a temporary condition. Even if you're broke, have the mindset of wealth. You know, one of the things that I used to hear a lot from people when I first started like doing live trades in front of people, it was this. I remember a few people would say this to me. Oh, you know what, man? You know, this risk management stuff, you know, all this like really like, you know, smart risk management, I'll do it once I get rich. But I'm poor right now. You know, I don't have a lot of money. So yeah, I'm gonna trade this way, but the right thing, the right risk management, I'm gonna do that after I make a lot of money. But it's like, well, if you know that that's the right way of risk management, why don't you do it from the start, right? Because obviously that's what works. Obviously that's what creates wealth. So why do you only start doing the right thing after you make money? You should be doing it while you're making money, okay, to protect your capital. So I never understood that with people. Everybody was like, yeah, I'll do the right thing once I make a lot of money. But it's like, bro, do the right thing now, and then that way you will make money. You know, it's seriously, it's all a mindset. Like 99% of what makes you successful in this business is mindset. Actually, almost 100%. Almost 100% of it is your mindset. It always is your mindset. You change that mindset overnight, and I swear you will change everything about your trading career. It really is mindset. It's that simple, but because it's that simple, it's complicated because we are humans, right? We're humans. It's patience and discipline don't come naturally to human beings. It just doesn't, right? I mean, if we had our way, I mean, if I had my way, if I didn't give a shit, if I had no patience, no discipline, man, dude, are you kidding me, man? I wouldn't even be on this live stream, man. I'd be like drinking beer in the morning. I'd be out there, you know, next to the pool. I'd be drinking that dragon's milk. Shout out to my boy Southern. You know what I'm talking about when it comes to that dragon's milk. Man, I'd be drinking that dragon's milk, man. If I had no patience, no discipline, that's what I would be doing, right? I'd just be out there. So patience and discipline doesn't come easy. That's something that you have to work on, all right? And it's going to help you in your trading career. And I'm telling you, that's the most important thing in your trading career is patience and discipline. I know I like to talk a lot about Warren Buffett, but Warren Buffett even said that. Warren Buffett said trading and capital deployment is like, it's like being a batter in baseball. But the thing is, there are no strikeouts. So you wait for that perfect pitch. You're never going to get struck out. You don't have to swing. You don't have to swing at everything your way. But when you see that perfect pitch, that's when you can really swing into it and get that home run. All right? It's like that. It's like being a batter in a baseball game and there are no strikeouts. Okay? Patience. Everybody loses that patience. They start swinging away at everything because they lose patience. They see like 3 or 4 balls like go past them and they're just like, oh man, I'm bored. I want to swing away at something, right? And they swing away at the worst pitch ever and then they get struck out. They get struck out, right? But the thing is, like, again, it's like you're a baseball player and if you don't swing, you don't get struck out. Just think of it that way, okay? You're just waiting for that perfect pitch, that perfect lined up pitch down the center where you can really just lean into it, all right? That is how money is made in markets. It's not this day-to-day, everyday, getting abused by 1-minute candles on a day-to-day basis. That is just not how it works. No pro does that, okay? Anyway, enough of my spiel. Only invest in what interests you. I see somebody mention that only invest in what interests you. So honestly, interest should never factor into this, okay? Let me tell you something, man. You never fall in love with a position, okay? If you start falling in love with the position, it's not good. It's not good, okay? It clouds your judgment. You get too emotional about it. Like, I don't. So, I mean, I understand, like, I know what you mean. Like, if I were like a computer expert, if I were like a software expert, it would give me an edge when it comes to analyzing technology trends within like the software space. And it would make me more adept as a person that trades software stocks, right? That is true. That is true. But you never want to like fall in love with a position, okay? One of my mentors told me something. I'm kind of hesitant to repeat it, on a live stream, but I'll say it here. Falling in love with a position is like falling in love with a whore at a whorehouse. All right. It's never gonna lead to that's exactly the words that was told to me. I'm sorry if that offends anybody. I didn't mean to offend, but that's word for word what my mentor taught me. Okay. Never fall in love with a position. Okay. Positions are positions. It's just think of it as like going long or short a widget. It's a widget. All right. Oil, widget, gold, widget, stock XYZ, ABC. It's a widget, it just take out the more you can get rid of a story. Humans, as human beings, we love stories. Okay. That's where culture comes from. Culture is just a story that we all agree upon. That's what culture is, When we share the same culture, we share the same story, right? As human beings, we love stories. We are storytellers, okay? And when we have uncertainty in our minds, when we have pieces of information we don't know, we like to make up a story around that. It is human nature, okay? Take all the stories out, all right? And so always look at things as is for what it is, okay? So I don't know if that answers your question, of only invest in what interests you. I would say just never fall in love with a position. Okay. Now, if you're like I said, like if your skill set and your interests are like, let's say you're like a software engineer and you really know the software space well, and you're able to analyze technology better than anybody else, and that helps you in long-term investing for certain software companies, that makes sense. Or let's say, I don't know, you're a medical expert and you know how to analyze drugs better than all the analysts out there in Wall Street. Good for you. Yeah, you might have an edge then in biotech stocks, right? So, use whatever edge you have. But again, just never fall in love with a position, though, it's because, a position should be, it should work for you. If your position doesn't work for you and is starting to work against you, well, then you need to cut your losses. Keep your losses small. Keep your runners running. All right. That's the name of the game. It's just math. Okay. It's the name of the game. Anyway. That was one of our questions from a live audience member right there. And again, guys, if you want to ask questions, you can ask it via the chat, or you can come to a Discord, the Key Crew Discord. You should see a link in every social media that you're watching this live stream on. There should be a link to the Discord. It's the Key Crew Discord. You can come in and join us live on there and ask away. Or you can DM it to me and I will keep your identity, secret. I won't be like, oh well, this person said this, unless you DM it in a public chat. If you post it in a public chat, yeah, I'll say your name. But if you DM it directly to me, I won't say your name. Okay, so I'll respect your privacy in that way. I get another question here. What do you recommend on where to start and how much, and how can you do it from mobile? How do you start? Actually, so this is something that we went over. I actually think, somebody asked me about a hypothetical portfolio last week. I actually think that a great way, a good anchor position is the S&P 500, okay? Now, I did say that, if you just do the S&P 500, are you going to get rich? Like, are you going to get wealthy, like, quickly? No, you're not, okay? And it will take some time and you have to invest, but I think it's a great way to start, okay? I think everybody, especially if you're an American, you need to have some exposure to the S&P 500. Okay, the S&P, and you may be asking to yourself, what is the S&P 500? I hear it on the news all the time. You hear, somebody on the radio or somebody on one of these like finance news outlets like CNBC, Bloomberg, Fox News, whatever. They say, oh, the Dow Jones is up 2,000 points and the S&P 500 closed up 50 points today. They say something like that, right? These are all indices. These are index, okay? It's an index. There's multiple indices in the US, but the most favoritely tracked one, okay, the most tracked index is the S&P 500. And this is all over the world. The S&P 500 is the global benchmark for risk assets. Okay? It is the global benchmark for risk assets. Even people all over the world, Asia, Europe, Africa, doesn't matter, Latin America, when they compare their performance, usually they're comparing it to the S&P 500, okay? I know the S&P 500 is a US index, but really, it's global, okay? 30% of the world's capital comes from the US. So in that regard, and I'm not like, I am an American, so you may think I'm biased, but when it really comes to global finance, the top dog is the US by a country mile. All right? By a country mile. There's no country that comes close in economic power as the United States. That is a fact. Okay? That is a fact. All right? And again, you don't have to take my word for it. Just look at where global wealth is positioned. A third of the world's wealth is centered in this one country, the USA. All right. So that's why the S&P 500 is the global benchmark when it comes to risk assets. The S&P 500 is the 500 largest companies that are publicly traded in the stock market, all in one index. So basically, when you buy into the S&P 500, you're buying into the strongest and the biggest cross-section of corporate America. And I'm about to share another Warren Buffettism. Betting against America has never been profitable. Okay? Let me say that again. Betting against America has never been profitable. All right? If you look at this is the S&P 500 index right now. You're actually looking at the screen, the chart. That's the S&P 500. Oh, that's the S&P 500 futures. Let me get to the S&P 500 cash index. Okay. So this is the cash index. This is the S&P 500 index. Okay. Let's take a look at multiple generations. Let's look since the 90s, since whatever it is. So in any multi-decade period, the S&P 500 tends to go up in a multi-decade time period. Why is that? Well, it's because America keeps growing. Corporate America keeps growing. Our population keeps growing. Our workforce keeps growing. We have lots of technological advancement in this country, which means increase in productivity. All of this translates to higher asset prices, okay, over long periods of time, all right? So in a multi-year, multi-decade time frame, the S&P 500 generally goes up, all right? I think this is a great way to start. And actually, no matter how professional of a trader you are, you should always have some S&P 500 index funds. Now, what I use SPY as my index fund of choice for the S&P 500. This is the S&P 500 index fund from Spider ETF, which is a company that manages this S&P 500 index fund, this ETF. This ETF stands for Exchange Traded Fund. It means it's a fund and it trades on the New York Stock Exchange, okay? That's all it is. It's just a fund that trades on the New York Stock Exchange. So SPY is the ticker symbol for the S&P 500 ETF. There's also something called VOO. VOO is the one that Vanguard manages. Both are good. I was told, I saw some statistics recently that VOO finally is bigger than SPY. SPY used to be, SPY is the original ETF, sector ETF, index ETF. SPY is the original index ETF, and they were the largest S&P 500 index fund for the longest time. But I believe last year it got overtaken by Vanguard. So you can use either one. I use SPY just because the options market is way more liquid, and I like to sell covered calls on my S&P 500 shares to generate income for myself. Let me say that again. I like to sell covered calls against my S&P 500 index funds to generate income for myself. This is a strategy I have been banging my fist against the table on every new investor, like, hey, get 100 shares of S&P 500. That should be your first goal. Your first goal should be to get 100 shares of S&P 500 index fund, okay? 100 shares at $658, that's $65,000. So your first $65,000 to $70,000 should be acquiring the S&P 500 index fund, okay? Because after you get to 100 shares, you could sell one covered call and start generating income for yourself. You may be thinking to yourself, well, how much income am I going to generate from this? Actually, let me move the view over to the filtered. So right here, this is the S&P 500. We're about to go look at the options market on the S&P 500 index fund right now. So if you actually look at this, can you guys see? Yeah, you can see it. Okay, so for example, like what is today, the 23rd? Okay, so today's expiration, well, the market hasn't opened yet, but on Friday at the end of close, if you had sold, actually, that's not a good example because the market just popped up. So we'll have to see when the market opens. But let's assume that the market hadn't popped up and everything like that. On Friday, you could have sold, for example, like the 670 call for 10 or 11 cents. Okay, which is like not a lot. It's $10. So you remember from last week, every option represents 100 shares. So if you sell one, all you got to do is multiply this by 100, right? Selling one means like selling one contract at 10 cents means you're selling 10 cents of options on 100 shares. So you multiply by 100. So that's $10, right? You would have made $10 on something that expires today. Okay. Now, that's probably not the best way. I don't like selling day to day when the volatility index is this high. I like to sell it like over a course of the month or something like that, because just in case if something like this happens where the market just pops up overnight and you're like, oh my God, what the hell, right? Because I don't want my shares to get called away. If you don't understand what that means, I will explain that in more detail later on as we get further on in the show. I realize that a lot of you have never traded options before, but I'm going to make some sort of like educational video where you guys can learn how to do this in a very simple way. Trading options is not simple. That's why it does require a little bit of technical knowledge, but I'm going to try to find a way to explain all that technical knowledge in a very, very easy way with graphics and everything like that. I still haven't figured that out yet, but I will figure that out. But anyway, just so you guys know, so the power of this, if you were to if on Friday you sold a 25-day options and you sold it for like let's say you went all the way out to like 680 or so, you could have made $368. $368 that expires in 25 days. And if the S&P 500 does not close over 680 by April the 17th, you keep that full $368. Now, you may be thinking to yourself, $368 a month, that ain't that much. Well, if you do $368 times 12, that comes out to be about $4,000, $5,000 out of $68,000. That's like 8%. That's like 8%. So you're generating 8% income, plus the S&P 500 averages around 6 to 8% in capital appreciation every year. So you get an 8% income plus that 6 to 8% per year on average capital appreciation. Oh, by the way, SPY also pays a dividend. It's not much. It's like 1 or 2%. But see, it starts adding up. You start seeing like you sell covered calls, you get the capital appreciation, you get the dividend. All of a sudden now you're averaging 20% per year. Remember on that retirement calculator, I was like, you can increase the risk a little bit. You can get a little bit more active and get 20, 25%. This is what I was talking about. If you hold the S&P 500 fund, if you sell, low risk covered calls and you're collecting a dividend, that's 20% right there. So again, getting that 20 to 25% per year on average is not so far-fetched. It's not that far-fetched at all. All right, it's definitely possible. And when you start making 25% per year, I mean, this number, how much you get, I mean, it just starts going crazy. Remember how we did that exercise already? Remember? If you took 5 years, all right, if you took 5 years, you put $1,000 a month into something, and you were to make like, let's say 20% per year for 5 years, and you're putting away $1,000 a month into something, yeah, you're looking at 12,000. Why is this so high? That doesn't make no sense. My annual contribution, 12,000. Current annual salary, 12% of that. 20% return. 20%. Oops. Because if I don't put a percent sign, it thinks it's 20,000%. Yeah. See, there you go. Okay. So again, you put $1,000 a month at 20% for 5 years. All of a sudden, after 5 years, you're going to have almost 90 grand. All right. You're going to have almost 90 grand, but you put in only 60 grand, but you're going to get 90 grand out of it. Right. Again. So all of a sudden now remember we call this generating alpha all of a sudden, whoa, that 20% doesn't seem so. It's because I know some of you guys were DMing me. How am I going to get 20%? Well, there it is. I just told you how. S&P 500 index fund, you get 6 to 8%. You make another 8, 9% in selling covered calls, which is income, cash in your pocket, plus you get that dividend. Boom, 20% right there. And we didn't even get to stock picking yet. We haven't even got to stock picking. We haven't even gotten to macro trading or anything like that. This is just purely off of holding the S&P 500 and selling covered calls. Just one ticker. That's it. So again, 20-25% per year. Is it that far-fetched? No, it's not. You just have to have a little know-how. You have to have a little patience and discipline, and that's it. All right. Anyway, I see this. How do you, somebody's asking me again, how do you change mindset from financial survival, enjoying your money, and changing it to saving and I guess being more mature? That's where I struggle in order to start investing. You know, and to that, I'll say this. We're all in different stages in our life, right? You know, investing sometimes is not right. It's not right for everybody. You know, for some people, it may not be like the right time for them to invest, right? Some people may not be in the right like stage of life to start investing, which is okay. You know, part of like, and I think this goes for anything that's like a big success, you know, as far as I know, at least in my own experience. Every large success, every like anything that out of the usual, you know, always takes a lot of time. And so it takes a lot of effort. And that effort doesn't necessarily translate to immediate gratification, right? Even like, for example, like let's say you work at a job. Yeah. Let's say you work at a job and you work really hard. You go above and beyond. Okay. Do you get immediate results when you go above and beyond like that day at the end of the shift? No, right? Your boss may not even notice that you went above and beyond on that first day. They might not even say good job, or they might not even notice. But maybe 2 or 3 weeks later, your boss may notice, oh man, this guy, he's going above and beyond. He's been doing this now for 2 or 3 weeks. Yeah. And even then, you may not get any instant gratification. You may not get any reward for that up front. Maybe you start going, you go above and beyond. And again, like 2 or 3 weeks later, your boss notices. Maybe 2 or 3 months later, your boss is like, you know what? We got room for another manager. You know, that guy, he's been working really hard. He's been going above and beyond for the last 2 or 3 months. Let's give him that promotion. Let's see if he's ready for that promotion. Okay? And again, so you went above and beyond for 3-4 months in that example before getting any reward for it, right? The same thing when it comes to investing, okay? You may not get that instant gratification up front, all right? But you have to do this for your future. This is something this is long-term. You got to think a little bit long-term than that, okay? And this is definitely going to help you out, you know, like years from now, where your lifestyle is better, you'll be a little bit more comfortable. Maybe you might even be able to, you know, take some more time off of work because you have other sources of income, right? But it takes time to build. You plant a seed in the ground, you're not going to get a tree tomorrow, all right? Let me say that again. You plant a seed today, you don't get a tree tomorrow, all right? So, you know, you have to think of it like that. Just do whatever mind hack allows you to do that. Just that's what I would say. That's the mindset change. For me, it's that mindset. Like, I just planted the seed. I'm not going to get a tree tomorrow. I got to keep watering it. I got to keep managing the grounds in order for this tree to grow healthy over the years. That's the mindset. Okay. And again, anybody who tries to get rich quick is probably going to stay poor forever. All right. This is not a get rich quick thing. This is something you're going to have to work toward, but you don't have to be actively involved. Like, it's not one of those things where you got to be in front of your computer every day for, every minute, every day and be clicking buttons and, I got to do so much every day. Like, no, it's not like that. Okay. You could do like just a few trades a year and you'll be fine. Okay. I actually think it's better that way. I would say 80% of investing, 80% of trading, 80% of capital deployment is waiting. Is sitting on your hands and waiting. All right. usually that's where people get screwed up, is that they don't know how to wait and be still. That's actually the biggest problem. It's not like, because in modern culture, people tell you all the time, right? Oh, the more you do, the more you make. You know, we've been conditioned in the modern society to think like this, but that's probably like the worst advice you could give to a capital deployer or a trader. The more you do, the more you make. No. Sometimes less is more. And definitely when it comes to trading, less is more. 80% of trading is waiting for your right conditions, is waiting. 80% is waiting. And that's where most people fail, is they just cannot exercise patience. They don't have the discipline for it. They don't have the patience for it. Most people fail because of that. It's not because of the indicator they use. It's not because of this. It's not because of that. It's not because of a lack of knowledge. There's so much financial knowledge out there. It's all, most of it is free now. You could go to Google, man. There's so many things, man. There's so many resources out there to learn about finance and trading. But why is it that most people fail? It's because of that patience and discipline. You can't show somebody how to be patient and disciplined through a YouTube video. You just can't. Okay? That is part of self-discovery. All right. And so that's usually where people will fail, is the patience and the discipline part. Even I told you a story last week, guys. I had somebody that I knew who was a floor trader at the CME. He was a professional. And of course, as the algorithms took over and it became electronic trading, he started, deploying his own capital through these new electronic markets. Even though he was a professional, he had a lapse in judgment. He started chasing after returns because he got desperate and he lost everything. And this is a market veteran. This is a guy who used to trade on the floor. This is a guy who used to make millions of dollars trading, on the floor of the Chicago Mercantile. And yeah, he had a lapse in judgment for a period of time, and he got ruined. And he had to go back to work at his old age because of this. He ended up driving for Uber. Yeah, it can happen to anybody. That's the thing. It can happen to anybody. It's just that one lapse in judgment is what ruins it, So usually the people that do really well in trading and in investing are people that are always calm and collected all the time. Their voice never wavers. They don't buy into hype. They're not easily amused. They don't get easily angered. Usually those are the guys that do very, very well in trading. Farmers do really, really well too. Farmers, surprisingly. Because they understand seasons. They know if it's snowing outside, you don't plant a seed in the ground, It's when the markets are behaving like this, we don't trade. They understand kind of that seasonality thing. Farmers make very good traders. But yeah, that's, the mind hack. Now, I hope that answered your question, but the mind hack I use is I planted a seed. It's not going to be a tree tomorrow. That's what I tell myself. So you can maybe use that. I don't know if that helps or not. But it's just something to think about, and for me also too, I also understand that for me personally, I want multiple streams of income. I never want to be forced to do something. And so because of that, I've always been very, very aggressive in saving money and in taking my savings and putting it toward investing. I have been like that since I was 12 or 13 years old. All right. I've always been that way. So, for some people it's going to come easier than others, but I'm sure, whoever I'm sure wherever you are in the world, I'm sure nobody says, oh, this 9-to-5 job, I want to do this forever for the rest of my life. I don't want to retire. I'm going to do this until I croak. Nobody says that. Some people that have jobs that they really love, if you really love being a teacher and they're I want to teach for the rest of my life. Yeah. Stuff like that. But not many people say oh my God, my 9-to-5, I want to do this forever, no, most people, if you gave them the choice, if money wasn't an issue, they would quit their jobs. Okay. 99% of the people out there, if money was not an issue, they would quit their jobs. So if you want the opportunity to be able to walk away from your job, this is something that you'll want to do. Okay. So if you hate your job, Good. This is a great motivation for you then. All right. If you hate your job, this is a great motivation for you. All right. If you want to, if you want a better lifestyle for yourself, this is a great motivation for yourself. Yeah. This is a great motivation to start investing. And again, it's not going to happen overnight. It's going to take some time, but these things are out there, and I will show you what I do. And you can decide, you can then decide what you want to do based on what I do. Okay. But, as far as getting started, I think the S&P 500 fund is a great way to start. Getting your first 100 shares in that and being able to start generating income from it is great. Because why? That income that you generate from selling covered calls on the S&P 500, guess what? That's the money you're going to be using to make the more speculative trades. So it's almost like you're paying yourself the funds to speculate with. So even when you lose, you're losing that portion of the income you generated from selling covered calls on the S&P 500. You see? Risk management, protection of capital, all that stuff. It all is part of that flywheel strategy, okay? Something to think about, and we'll talk about that more as we progress in Money Maxxi. These are all different topics that we will cover. And the more you listen to it, the more you think about these things, the more often that you're exposed to these conversations, the more you will pick up. It's kind of like it's kind of like being a building contractor. When your first day on the job site, you may not know all these terms. You may not know all the different tools, the names of the different tools, the size of the drill bits, all these things that, just come with experience, right? And then you stay in the job site, you come every day, you listen to the other guys working, you work and you continuously work for like a month or two. And after about a month or two or so with hanging around with your coworkers at the job site, all of a sudden, all these terms and everything, it just becomes second nature, right? So it's all about that exposure. It's all about just staying on top of it. And that's true with any type of learning, right? That's true with anything, not just finances, but anything. Like for me, Mitch, for Fortnite. Man, remember the first week when I was playing with you guys? Man, dude, I was so bad. I didn't even know what the words were. I didn't even know what an enforcer was, or I didn't even know what a storm was. Remember, you guys? Oh, you guys were like, "Oh, a storm is coming." I'm like, "What storm? What is it? What are we talking about? What?" And then after playing with you guys, after a while, I started getting a little bit better, right? I still sucked, but it's better than my first week, right? Same thing, same concept. When it comes to money, all these things, anything in life, anything you learn in life, okay, it's gonna take time. You're not gonna pick up on it on day one, right? It's gonna take some time. It's gonna take some practice, yeah. So stick with it, And I think this is something that every person should learn. Why they don't teach this in school, I don't know. I really don't know why they don't teach this in school. They should. I think so. I think there should be a personal finance course in high school. Actually, fuck high school. In middle school, they should start teaching this, man. They should start teaching about saving, money, debt, credit cards, personal finance, all this stuff throughout middle school and high school. They should, but they don't. I don't know why they don't. I don't know why. They should, though. All right. So, other questions as well. One person sent me a DM over the weekend. We had somebody who asked, actually, this was a very, very good question. And I just want to get to it before we start getting into other markets and things like that. Actually, let me pull up the notes. It was a very structured kind of a question. Okay. So this was the question that somebody gave me. It was sent via a private DM. So I'm not going to say who it's from. But just a little backdrop though. I believe the person is a she. It was a woman. As she said that she was about to get married. So first of all, congrats on your engagement. All right. But she had a very good question. She's going to get married to a man that has significantly more assets and gets paid much more than she does. She and her partner had a conversation about roles and working going forward. Her betrothed, basically her man, is willing to be the sole breadwinner for the entire family, and they have plans to have children together after they get married. He has not asked her to sign a prenuptial agreement. So he has not asked her to do this, but he hasn't really shared many details about his own finances. So the question from our community member is, she wants to have a conversation about finances, getting joint accounts, and talking about how assets will be titled if they decided to buy a house. How do you start that conversation without looking like a gold digger? Okay, so that was that last part was her exact wording. How do you ask these questions without being a gold digger? Okay, without looking like a gold digger. Okay, so first of all, again, congratulations on getting engaged. I think it's very obvious that if you are getting married, obviously, like, you love each other and you trust each other, i.e., you guys have similar values, right? Marriages don't work. These kinds of partnerships, marriage is a partnership, right? These partnerships don't work if the values between the partners are vastly different. So I'm assuming your values are similar, okay? If they're not, well, we gotta have a different conversation. You need to go see a counselor for that. Okay, you need counseling for something like that. Okay, if you don't have the same values. Okay, but assuming you guys do have the same values, I don't see what's wrong in having these types of conversations up front. I don't see anything wrong with that, and here's why. Okay, let's say you do have these conversations, right? And you're respectful, okay? And everything like that. Everybody's respectful, but I guess the fear here is that, well, what if we get into such a big fight over money that the marriage or the wedding ends up getting canceled or something like that? I mean, if all it takes is one money conversation to split up a relationship like that and to cancel a wedding, let me tell you, then most likely that marriage was not going to work out anyway. Okay. If after one money conversation, you guys get into such a big fight that you guys end up not getting married, well, in that case, I would consider that dodging a bullet. All right. I would consider that dodging a bullet then. All right. I think it makes a lot of sense to have that conversation, especially when when your partner is saying that he's going to be the sole breadwinner and he's ready to accept that, and you guys are wanting to have kids. I don't think it's that far-fetched. I think it's very logical for the next question should be then, well, then how are the finances going to be managed? If you're going to be the sole breadwinner, how am I going to get access to these funds to spend, for daycare for the kids, for this, for groceries, all these things, right? So that's where the joint asset conversation is going to come in, right? Also, too, if you're going to have kids, that means you're going to have an estate. That means you got to start doing estate planning. So if you start doing estate planning, then are we going to place the house in a trust? If we're going to put a house in a trust, is that trust going to be under both our names? Is it going to be a living trust for both of us with survivorship, right? All of these things are going to come out once you actually put some of these plans in place. So you might as well have that conversation up front. Don't be scared to have that conversation. I actually think it's a great idea to have that conversation before you actually tie the knot. Because again, if you find out through this conversation that you guys have very different values and you guys are just not seeing eye to eye, well then maybe this marriage wasn't meant to be. All right? And there's nothing wrong with that. I'd rather know that this wasn't the right thing to do before we start like signing papers and getting married and things like that. I would rather like to know that up front, right? Don't you agree? No matter how unpleasant it may be, right? Wouldn't you want to know about that up front? Like, wouldn't you want to know if this marriage is going to work out up front, right? If all it takes is one money conversation to split you guys up, then maybe this wasn't meant to be. Because I'll tell you right now, as a married couple, you guys are going to face trials and tribulations together. And probably that conversation about how to split the money is probably going to be like one of the lesser problems you guys are going to have. All right. Just if you have kids, you're going to have way more bigger trials and problems that come up, and you got to be able to solve together. Okay. So if you can't even get that money conversation, that initial money conversation, right, then how are you going to solve all these other problems that come with like having kids and starting a family? Right. I mean, again, like, let's just be realistic about things. Yeah. And so I think I don't think it's being a gold digger at all. Just be very just be respectful. Okay. Because, you have to understand whenever somebody like has financial success and they've built everything by themselves, there's a certain pride over it. Right. And you have to understand like he's probably going to have a certain pride about it. That he worked hard to get it. And also too, there may be assets that he has with other people in his family that he can't jeopardize, So you have to be kind of understanding about that part. But in the same breath, your partner has to be understanding of the fact that you're probably going to be the one taking most of the the childcare duties and all the domestic duties. You're probably going to be the one that takes a bigger role in that. So he needs to be supportive of that too. Okay. So, it's a partnership. It is a partnership. And everybody has to be on the same page. If you can't even get on the same page regarding that, forever and happily ever after are going to be a very far away. It's gonna be very difficult to achieve. Okay, happily ever after is gonna be very difficult to achieve if you can't even get past that first conversation. Okay, so have that conversation, be respectful, understand that there's going to be a certain amount of pride that the other person has, that has assets that's worked hard to accumulate those assets. But again, they also have to be understanding of your position where you're going to be the one taking care of most of the household duties and things like that and raising the children. And so he needs to give you that support, that financial support, in order to make that happen. Right. And also too, what if something happens to him? Right. You need to be able to get to those assets. If something were to happen to him, let's say he gets incapacitated, right? I'm not talking about just dying, what if he doesn't die, but goes into a coma, right? And can't work. Then what? What are you supposed to do then? Right? How are you supposed to raise the kids? How are you supposed to run that family when he is in a hospital bed in a coma and hasn't passed away and is on life support, right? How are you supposed to take care of that then, right? All of these things will come up. Okay. So all of those things need to be addressed. And I think, it's a legit conversation to have. I don't think there's any problem with that. And if they keep saying, even after you're being respectful and understanding, if they keep calling you a gold digger, then, maybe he ain't the one. Maybe he ain't the one then, right? So just keep that in mind, and again, just be respectful and be understanding when you have that conversation. But I think it's a conversation worth having, and I think any person that is getting married, I think it's very understandable if their partner raises these issues. I don't think if somebody I proposed to said that, brought up these questions to me, I wouldn't feel offended. I wouldn't, because I think it's natural to know these things, because it does happen, right? Sometimes people get sick. Sometimes there's accidents. Sometimes people get incapacitated. Then what, right? I think it's a very valid question to ask. So ask it. And again, just be very respectful, be understanding of it. But I think it's a very good conversation to have. So go for it. And I hope that answered your question, by the way. And again, congratulations on getting engaged. And I hope everything works out very well. I hope you guys have the, nice wedding and, have that happily ever after. I really do. I really hope so. Okay. So congratulations on that. And if you have any follow-ups, if you want me to answer any follow-up questions to that, by all means, let me know. So actually, I wanted to make sure that I answered that before getting into some of the other parts that I wanted to go over today. But hope that answered your question. Again, congratulations. All right. So let's look at the market. Let's see let's get an update on what's going on in the market. So again, we're seeing that the markets are flying to the upside today after Trump said that he's going to extend the attack on those I guess the attack on power plants in Iran. We just saw that news report that came out. So right now it's at 6666. We're pulling back down a little bit. So we went all the way up to 6,700 on the S&P 500 futures market. And it is pulling back just a little bit, ever so slightly. It is pulling back. Oil it rebounded back into the 90s. Now it's teetering between 90 and 91. Let's see where gold is at, because that's where we have our position. Right now, we got a position on gold. Let's see where our gold position is. 4397, 4,400. Okay, we're still in the profit. We still got some good gains. We got some good gains in this. All right, very good. And I'm still looking at. I really was hoping that the pullback would have been a lot steeper so that we can get into more Brazil. Brazil, come on. Pull back just a little bit more so I can get in more. Anyway, I really want to get some more Brazil. I can be patient on this. I'm going to exercise patience. See, hey, remember? Full circle. We're going back to that. I have to exercise patience. I'm not going to FOMO in. A younger Rooster, okay? Rooster 5 years ago would have just jumped in on this, but no. I have matured. I've learned from my bad ways, okay? I would like to think I'm better now than I was 5 years ago. So I will exercise some patience. I'm going to wait for my price, again, between 31 and 32. That's when we re-up. That's when we go full position again. 31 and 32, I will be patient. Okay? I will be patient. Although it is testing my patience right now. This thing is definitely testing my patience. Also too, I think, man, I kind of think maybe this was our short opportunity. I don't know, man. I don't know. I really wanted to get closer to 6,800 before I short. And even when I short the market, it'll probably be very small. I don't know yet. I have to see what happens when we get there. Now, it did, because of the volatility, like that 50 points, is that really that big of a deal? Probably not. With the dollar going up too, that 50 points could have been just the dollar appreciation as the dollar gets more expensive. And is the dollar more expensive by 1%? It is from the start of the month, so I guess it does make sense. So maybe it did. Maybe that was the zone to short. I don't know. Maybe it was. If I see that it comes up back into that zone and it starts to get weak again, I may do a little short here if it comes back to this. Okay, I don't know yet. It's really crazy. It's really hard to trade around like all this headline risk, just because one tweet, one social media post can do this. Like literally it was one social media post at 7:04 a.m. that caused the markets to jump up 2.6% within minutes. The S&P 500 jumped the 2.6% on the highs of the day because of one tweet. So how do you manage risk in that kind of an environment? I think the best way is to start diminishing your position sizes. Make the position sizes smaller so you can withstand more volatility going against you. All right. Because the last thing you want is to get a big position and get chopped out only to be right like a week later. Right. So you have to be able to withstand more volatility. You have to be able to withstand that headline risk. What I would start doing is start dropping your position sizes so that you can withstand more volatility against you. That's what I would do. So that's what I'm going to do. I'm going to start diminishing my position sizes so that I can take more volatility against me when I enter a trade. Okay. I think that's the best way to manage risk on this headline fiasco that we're dealing with. It's like trading through a soap opera. It just seems like that, but oh well, what are you gonna do, right? That's just the reality of things. Let's see here. What else is going on? A lot of people are talking about oil. A lot of people are talking about derivatives. Oh, the bond market. Yeah, so oil is one risk. I don't think that's the main risk, to be honest. And again, like I've told you guys why, we have seen oil do this before. I mean, in any type of conflict, this kind of thing happens, right? Oil goes up, and the kind of the uncertainties of war become certain, and then oil starts coming back down, right? Again, the example that I used last week was when Russia invaded Ukraine, right? When Russia invaded Ukraine, we saw oil go all the way up to $130, $120, and then guess what? 6-7 months later, 6-7 months, a year later, boom, we're back down into the 70s again, right? Because all that uncertainty gets priced in. So I actually think maybe in 6 months to a year, oil will come back down. I don't think that's a big problem, but I do think what is a big problem is credit right now, right? And you may have noticed that on social media, you're seeing a lot of people talking about credit this, credit that, the banks are getting weaker, all of this stuff. And I'm going to tell you a little bit about the credit markets right now, and for most of you, how this affects you is probably good, through mortgages. I know a lot of our community members, they're people between 30 and 40 years old, some in their 20s and things like that. Anyway, between their 20s and 40s, a lot of people are thinking about buying a house, right? It's one of those things, especially in America, the American dream, owning your own property, all that stuff, right? So for most people, when they think about interest rates, they're thinking about the mortgage that they're about to get, and it looks like mortgages are going back to around that 7%. And so, just like you borrow money to buy a house, companies borrow money for expansion, for business operations, like a revolving credit, for example. It doesn't have to be just to buy large ticket items like a factory or something like that. A lot of businesses use credit because their expenses to when they get paid and to when they get the sell their product or service, sometimes there's a big time gap in between. For example, let's say you're a manufacturer and you buy metals for your widget that you're selling, but it takes 2 weeks to make the widget. Once you get the metal in, it takes 2 weeks to make the widget, takes another 2 weeks to ship it, and then you have to sell it, and you're not getting paid on it for 2 or 3 months after you spent money on building it, right? So in order to bridge that time between spending money on building up your inventory and then actually getting paid on selling it, sometimes there's this big time gap. And a lot of companies use a revolving line of credit to bridge that gap between that time period so they can get working capital before they sell their actual inventory, okay? This happens a lot in farming. Farmers usually use a revolving line of credit because they have to pay and they have to spend capital on planting equipment and growing their crops, and then they won't get paid on it until the season and the harvest is over, right? And in between, they still have to spend money, they still have to pay employees, so they get a revolving line of credit to bridge that gap, okay? So credit is very, very important to the business cycle. That's the point of all this, okay? So there is a way to monitor credit conditions, and I'm about to show you that right now. I'm on TradingView right now. TradingView is free, okay? You can actually get a free TradingView account, okay? And you can actually track this for free. You don't need to buy any data services for that. What you do is you press an LQD divided by, that's the /IEF, just like you see on the screen. LQD divided by IEF. So first of all, what is LQD? LQD is the investment grade corporate credit ETF, corporate bond ETF. So investment grade. So this is high credit rating companies that are very credit worthy, and their corporate debt. So it's a fund that has all this investment grade corporate bonds, this corporate debt in their portfolio. That's LQD, all right? IEF is another ETF. It is the 7 to 10 year Treasury note ETF. So the US Treasury note, the 7 to 10 years maturities, all of it in one ETF. That's what IEF is. Okay. So then what is this ratio? All right. You can think of it as this. In finance, we got something called the risk-free rate. Actually, let's not even use finance terminology. So, well, okay, fine, let's do it. Okay, so in a lot of financial modeling, we consider the 10-year treasury yield, the interest rate on the 10-year treasury note, we call that the risk-free rate, okay? Does that actually mean that when you buy a 10-year treasury bond, there's no risk? No, there is a risk, okay? The price of a 10-year treasury bond will fluctuate, okay? It does fluctuate up and down with the markets. But the reason why we call it a risk-free rate for a 10-year treasury note is because the U.S. has traditionally not defaulted on their debt. It is constitutionally mandated in our law. It is in our constitution in the U.S. that we have to make our debt payments. Okay, so because of that, and because the U.S. has traditionally kept their debt promises, we call the 10-year treasury yield the risk-free rate. Okay, even though it's not really risk-free, but anyway, it's the benchmark when it comes to like credit. When it comes to interest rates and credit, the 10-year treasury yield is the benchmark. Okay, we call that the risk-free rate. So LQD over IEF, that ratio tells us, okay, what is the risk premium on corporate debt over government debt, AKA the risk-free rate, the US government rate, AKA the risk-free rate. So what does that mean? TLDR, what does that mean? If this chart is going up, if the ratio between LQD and IEF, if it's going up, it means that the risk premium is low on corporate bonds. It means that there's risk on, right? It means above, there's no reason to go like, there's not that much risk in the private sector, in the corporate, in the business sector. There's not that much risk. So therefore, I'm willing to buy more of the corporate bonds than the government bonds. And so that would make this line trend up. So anyway, TLDR, if this chart goes up, it's risk on, okay? If it goes down, it means there's a big risk premium for corporate bonds. That means there's some risk out there we don't know about. We'd rather put it in the risk-free rate. That's when this chart starts going down. That's risk off, okay? So if you actually compare it to like the S&P 500, this is actually a pretty good indicator of risk on and risk off sentiment in the market, okay? So, yeah, there we go. Okay, so as you can see, actually, you know what? Let's just put this on a pin to, I'm sorry, let me just pin this to a new right scale. Give me the regular, also give me the regular. Okay, so as you can see, when this line, when the red and green candle chart, that's the LQD divided by IEF ratio chart, and the blue line is the S&P 500. So as you can see, whenever the ratio between corporate credit and government debt, when it's going up, the market is also going up. When it's coming down, it starts rolling. The market also starts rolling over, okay? Because it's the perceived credit risk in corporate America, or in business, in corporations, okay? So it gives you kind of like the risk sentiment in business credit, in corporate credit, okay? So again, as this ratio chart goes up, risk assets and also the S&P 500 goes up. If you want to take a look at like really big downdrafts, like this right here, this is COVID. So during COVID, yeah, I mean, of course, everybody was flying to safety. Nobody knew if companies were going to be able to pay back their debt because nobody was operating. People weren't buying things. And all of us, everybody just dumped their corporate bonds to get into safe U.S. Treasury bonds, right? And that caused this ratio chart to go boom down. And yeah, and the markets went down with it. And then when this started coming up again, when people started having more confidence that corporations would be able to pay back their debts, that's when the market started rising up again, okay? So right now, right now we are seeing, all right, and let's just take this off again. We are seeing the corporate LQD over IEF, it got rejected on this previous support. This was previous support. You see it? It bounced, boom, support bounced up, support bounced up. And this is a pretty important support line. This support line goes all the way back to 2009. Okay, since 2009, if we got rejected from there, usually we saw a bigger correction in risk assets like the S&P 500, okay? So it actually tried to get back up there on Friday, and then it got rejected from there. And not only that, we're actually seeing even in pre-market, even though the S&P 500 is up, the LQD over IEF ratio is actually still going down even on today. Even on an up day like today, it's still going down. So this is one data point that gives me a little bit more conviction on my next trade being a short in the S&P 500. And again, I need to exercise patience and discipline here. I need the S&P 500 to get to, closer to like 6,800 or so. I need it to get closer to 6,800. And then I might attempt a short right here, okay? As long as this chart, the LQD over IEF chart, as long as this remains in a downtrend, okay? As long as this remains in a downtrend, that means there's a lot of stress on corporate credit still, all right? And so if we see that divergence where the S&P 500 bounces, but this chart still keeps rolling down, that will be my cue to enter that short if the S&P 500 gets to 6,800. Okay, so I'm looking at that trade. That's a trade that I'm looking at, and I wrote about it in my on the timeline in my on my X timeline. So you can actually go back and take a look at it. I actually wrote about it twice over the weekend, and I put like charts, and you can actually see the charts and everything like that too. So just in case if you forget what the ticker names are, you can always replay this recording. But you can also go to my Twitter, and you can actually see those ratios yourself and look at the tickers yourself. Okay, and so I even wrote about it. I even posted something about it. So go take a read. And we'll monitor this. So even on Thursday, we'll monitor this. This is one of our charts that we'll keep monitoring every time we do Money Maxi, because I do think that a lot of the cues for risk assets and kind of like the seasonality of the risk assets is going to come from the bond market, the credit markets. The credit markets right now are stressed right now, okay? And a lot of that, I mean, it started with oil, and with oil prices going up like that, the inflation expectations are going up, and it is causing a lot of the sovereign debt, like treasuries, even government debts all over the world, the yields to go up. Because again, now there's a worry amongst financial professionals that, hey, if inflation picks up globally, central banks may have to stop cutting interest rates, and they may even have to hike interest rates. Okay, so if that happens, then then in that case you could see interest rates going up. And if companies are already having a hard time managing their debt, imagine it's going to be that much more harder when interest rates go up. Right, so it puts it so the even treasury bond yields going up and the interest rates going up puts more pressure on corporate credit as well. So how is that all going to unfold? We shall see. But there's already, Jamie Dimon, who's the CEO of JP Morgan, has already talked about problems within the private credit market. And so they're already looking at adding drawdowns into their balance sheets and things like that. They're already raising cash for potential defaults within the private credit market. So you're already starting to see that. Now, private credit, for those of you guys who have been following me for more than a year, I've been talking about private credit deteriorating since 2020, like early 2025, late 2024. Okay, so this has been a phenomena that has been like a year and a half in the making. It's just now coming into light. It is now just coming into light. See, we saw this. Remember back in during that what do you call it? During that Liberation Day sell-off. Remember, we saw this huge dip in corporate credit. And I said, hey, this is a signal that there may be more weakness to come in corporate credit. Remember that? But now it's starting to get talked about by the news media. It's now starting to get talked about by banking executives. So I think that is a risk that we will look out for. And again, it got rejected on a very, very key level. And even though the stock market is bouncing up today, and even though the S&P 500, look at it right now, the S&P 500 right now is already doing another, it's up 2%. Even though that's still the case, we are seeing that this ratio is still coming down, even on an up day like this. So, boo! I mean, we'll see what happens, but we'll keep monitoring this. And again, if I see that this LQD IEF ratio, if it still keeps going down, and we see the S&P 500 hit that 6,800, I might attempt a short. All right, via a put debit spread. So I'll buy a put closer to at the money and sell another put out the money. It'll be a hedged short position on the S&P 500, okay? If you don't know what that means, don't worry about it. I'll show you what that means when the time comes. When the time comes, I'll place that trade live and I'll show you my thought process and all of that, okay? So I am going to be attempting a short. Again, if this chart, this LQD IEF still keeps going down and the S&P 500 hits that 6,800 or so, I'm definitely going to be looking at that short, all right? Oh, I see some people. Yeah, Em, what's going on? I'm hearing that still mad at you, but I am, my bad. Yesterday, what Em's talking about is that yesterday I said that I was going to play Fortnite with her in the morning. And I'm not going to lie. I tried. I really did try, but I passed out. I worked all night. I was staying up all night and I was like, you know what? I'll stay up all night until I play Fortnite. And like before, like, I know you guys are like an hour or two after me. So like, yeah, by the time it gets to 7 or 8, by the time the sun starts coming up and I haven't slept and it's Sunday, yeah, I passed out. I did try to stay up though. And I really did try to stay up, but I passed out. So my bad. I'll try to play today. You should have called me then. If you had called me, my volume on my phone was on. You could have called me and woken me up. You worked all night too? Okay. All right, then. Well, in that case, maybe we should play after your shift then. If you're going to stay up, because I'm always up at that hour. I'm always up at that hour. That late night hour is a great time because nobody's around and it's a great quiet time. And yeah, so if you, I don't know, after your shift, if you want to come through and you work today, well, shit. We'll get some in. I got to get my Fortnite practice in because apparently Danny might ask. I don't know if Danny's going to ask me to be on his team for that April match. Oh, well, we'll see. Okay. We shall see. All right. Well, let's do it. Just a quick recap. I just want to take a look at all of the positions. Oh man, our gold position is working really well. Remember that? Woo. Right. So remember 41 to 4,200. I said we're going to buy some more gold and we got in on Trade XYZ. We're already up 85% since we took that gold trade. Man, I should have put more into it. In my crypto wallets, I only had $300 in USDC. I only had $300 in USDC after I sold off all the like little dust in my wallets. And already that position is worth like $600. So we've made already $250 on our gold trade. And again, it was all of this gold, all of our levels in gold is our levels that we talked about for months. Remember how I've been talking about getting in gold since for some of you guys that are following me on X and for those of you who came here through the X spaces, remember on spaces how I would talk about getting in gold? I talked about that in like October. I talked about that last summer even, and we never got our price. Remember that? And we finally did. We waited like 5 or 6 months to get our price, but we did. We had to exercise a lot of patience, but look, we got in. We finally got the conditions that we were looking for. Yeah, it took 5 or 6 months, but we got in and boom, immediately we start making money. See, this is the power of planning ahead of time and having and executing on a disciplined plan with patience. This is the power of that. No drawdowns, no bullshit, no nothing. I get in and I start making money, okay? I'm not saying that every trade works off that way. You know, when you're patient and disciplined, yeah, you're still going to have some that are going to be losses, but but this situation happens more often where where you don't get that drawdown. You're profiting from a trade, and it's very, very stress-free, okay? That's the type of trade I like. I don't want to be stressed out. I don't want to have to look and manage and babysit my trade all day. I don't like that. I like to just place the trade, have it automatically executed, and just be able to walk away from my screen, okay? That's how I like it. But anyway, we're already up 87%, and we just got into that position just a few hours ago. Okay, just a few hours ago, we're already up 87% on it. Okay, so that is a trade that we talked about for months and months and months. And now, even on Friday, we took that live trade around 4,400 in gold. We got into that GLD call spread, and today at 4,100 to 4,200, we got in on gold via Trade XYZ on a perpetual futures on an 18x leverage long, and we're up 88%. I think that's a great day. Boom, that's a beautiful day. Yeah, so I think this is going to be a very good trade for us, and hopefully this thing gets to 4,500. And if it gets to 4,500, I mean, we will have made a killing. We will have 3x our money by then, and I think it's very possible. I see the S&P 500 is starting to move up again. It looks like 6692. That means 6700. That means we're only 1.4% away from that 6800. We might get there this week. We might get there. So again, man, that's the next trade I'm looking at. If S&P 500 gets to 6800 and the LQD IEF ratio chart still keeps coming down, I'm going to do that short. Okay, I'm probably going to use SPY or I'll use SPX. SPX is the actual index, the cash index. The SPY is the ETF of that index, okay? Either way, I'll use some put options and short the market via put options. And I think that will be a very good trade. I think so. I'm actually curious. I shouldn't be looking at the Japanese yen because I got stopped out of it last week, but I'm just very curious. Oh, of course. Of course. Oh, man, I don't want to look at that anymore. Yeah. Okay, I'm in gold now. I'm in gold now. Fuck the yen. I'm in gold now. All right, fuck it. All right. So I still feel salty about that. I feel salty about that shit. It is what it is. UPS making a nice recovery. Very good, very good. Alibaba still languishing. That one is pretty much that position. It did not work out for us. So the yen, Alibaba, those are the two trades that did not work out for us this season. Everything else worked out really good. Even Alibaba, the first 3 Alibaba trades worked well. That last one did not. And then also too, our yen trade did not do well. But the Treasury short, the Brazil, the S&P 500 trades that we had, the UPS, all the other stuff, it worked out great. Everything else we made money on. The crypto stuff we made money on. You remember we sold puts on Bitcoin. With the IBIT, remember we sold some puts and we got some money out of that. That was like a few weeks back. So that worked out well for us. So, you know, mostly winning trades, a couple of bad ones. Overall, we kept some money and we grew. I would say it's a good season. All right. Well, wow. Gold is really going up right now. We're at 4,800. How much money are we making now? Yay, we're almost at double. We're almost at double. Look at that. 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 Yeah, we almost doubled our money already. All right, there we go. All right, guys. Well, I think there's more room to come. And again, man, I've been saying this even last week. Remember how I said central banks are buying gold? If we see a big big sell-off in gold over the weekend, I said it's going to be a very good opportunity. See, we planned ahead. We anticipated, we planned ahead, and then we executed with discipline, with patience, okay? All them mofos and all them CT like gurus, all those financial gurus on Twitter, all of you motherfuckers that got in at the 5,500, you guys were like, oh man, yeah, I'm buying gold at 5,500 because it's going to go to 10K. Yeah, you guys were stupid. Okay, you FOMO'd into it and you got wrecked. All right, let this be a lesson. All right, JOMO, no FOMO. The joy of missing out. If you miss out, there's always another opportunity. If you had just waited 3 more weeks, you would have gotten a supreme opportunity to get in at gold at the lows. But since you didn't have that patience, you got wrecked and the market took your money. All right, another Warren Buffettism. I know I quote Warren Buffett a lot, but Warren Buffett said this as well too, man. The market is a mechanism that is designed to take money away from the impatient and give it to the patient. Okay? Always remember that. Always remember that. All right, guys, I think I answered a lot of questions. I'm going through my Discord right now to see if any of you guys have any other questions you guys posted or anything like that. I don't see any. Oh, I do see something. Hold on. Somebody mentioned something. I got something. The market manipulation is wild. 45 said we're in peace talks with Iran. Iran came out quickly. Then they stayed. The back and forth. Yeah, I don't think the market is manipulated. I think the messaging around the market is manipulated. Now, whether or not he's doing this on purpose or not, I mean, who knows? That's not that we as traders, we can't really control, what gets said on social media by the president. All we can do is manage risk in light of that uncertainty. And because there's going to be a lot more headline risk, what I'm doing in my own risk management is that I'm now being even more patient for my levels, and I am sizing down my trades so that I can withstand more volatility. Again, so again, because there's uncertainty out there, I don't know the future. You don't know the future. Nobody knows the future. Because nobody knows the future, you have to manage risk. And my risk management for all of these like White House, headline risk, all these like news bombshells and tweets that come out, I'm just gonna start, sizing down my trades a little bit. Okay, sizing it down so that I can withstand that volatility. Again, risk management, that's the name of the game. We're not paid as traders to predict the future. We are paid to manage risk when there's uncertainty. Okay, so embrace that uncertainty. That uncertainty, that volatility is going to get us paid, but it also adds a layer of risk where trades can work against us in a big way in the beginning. And if we want to be able to hold on to that position and end up being right later on, we need to position size accordingly so that we don't get stopped out or chopped out. Okay. So just something to keep in mind. Just another layer of risk management to think about. All right. I'm reading through all the comments right now. It doesn't look like anybody else has any questions or anything like that. So guys, we're going to end it here. The market is going to open pretty soon here. The market's going to open in about 30 minutes. I'm going to take a quick break. Maybe eat a little breakfast. They come back and start trading again. I will be in the Discord. I'll be chatting in the Discord as well. We got a couple of active traders in there. We always like to powwow in there and bounce some ideas. And if you want to come through, hey, and our in the about section in all the social medias that you're watching this live stream right now, you should see a Discord link. It's for the Key Crew Lock-In Breakout. It's our group that we trade with. We also play some video games together. We got a little like gaming guild going on as well too, and not just a trading guild, but also a gaming guild. So come through, hang out with us. M, I don't know if you're going to be available for a little bit of Fortnite before you go to work, but if you want to run a few, let me know. Your boy needs to stack some W's. So if you want to play, let me know. Text me, and we'll go from there, guys. Guys, Mondays and Thursdays, every Mondays and Thursdays at 7 a.m. Eastern, we get up and we talk all things money. Money Maxxi, baby. All right, so I'll be back on Thursday morning at 7 a.m. We'll talk about some more things money. Ooh, on Thursday, I'm going to set up an AI agent. I'm going to start using AI agents for certain trades, and I'm going to set that up live during a live stream. So you're going to see me setting up a live AI agent, and we will start scripting little things, little indicators here and there together. And then from our little indicators that we build, we will build off of that and build an actual AI trading agent that uses those indicators. And then from there, we'll make more agents that can cooperate with one another on some of these trades and some of these DeFi operations. I'll show you guys what all that means. If you guys don't know what any of that means, I will show you that, and I will do it all live in front of you guys. So that should be really fun. We're going to start that on Thursday. So Thursday at 7 a.m., I'm going to set up that AI agent, and I'll set it up in front of you guys so you guys can also follow along and do it alongside me. So anyway, guys, I'll be back Mondays and Thursdays, 7 a.m. Eastern for Money Maxxi. We're going to play a little bit of Fortnite later today, and all the other days of the week, we'll play a little games here and there. So make sure you follow along. Make sure you set your notifications on. Guys, thank you for joining in today. You could have been anywhere else in the world, but you decided to be here with me, and I do appreciate that 1,000%. All right, guys, have a great day. Safe trading. You guys kick ass out there and stack those W's. I'll see you guys later.